and not play games in here. First off, we've got November 24th, 2015. We continue to roll through the year. Couple things that you guys got to be aware of, and that is the fact that FOMC is going to raise rates in December. I think it's about a 70-80%. The Fed Fund Futures is pricing in that probability. That's the highest that they've been for a rate bump since there's been talk of when. So when we get into the December meeting, it's pretty much baked in with Treasury prices and equity prices that they're going to raise rates the next meeting, and then probably kind of downplay future rate hikes to really keep the market saying, well, a 25 basis point hike isn't a big deal, and they could kind of manage how and what kind of effect that rate rise had, both immediate and over like a 6-month period. It's typical that it takes like 6 to 8 months for Fed action to actually take hold in a market, so it doesn't obviously take immediate effect. So it'll give kind of, I think, the Fed a way to gauge what their first hike in almost 10 years has done. Now, remember, they started lowering rates down to zero, and it was November of 2008 when they introduced quantitative easing. They went to zero and essentially went below zero with QE. But before that, they were lowering rates from like 4 or 5% ahead and during the financial crisis. But before that, they hadn't raised rates for a couple of years. So it was, I think, 2005 the last time you actually had a rate hike from our Fed. That's 10 years ago. Then you take that the other central banks are in easing mode except the Bank of England. You got Japan in a recession. You got China having much slower growth. You've got the ECB reaching into their toolbox for QE, and it gets to be kind of a conundrum. Why are we raising rates? And the IMF doesn't want us to, and so on and so forth. Let's go kind of like back to the basics. I think this is important to start with just a couple domes and create an exercise of taking oil, which is on the right, okay, and taking the ES on the left and seeing if they follow the leader. Now, they haven't that much this session necessarily, but they have in the past, especially on big moves. I can't make oil jump and show you how to buy the ES quickly, but I want people to get used to watching 2 markets before they watch 6 or 7. And I think that understanding that more than one market matters when you're trying to find good locations and build your story, you still got to start with 1 and then 2. And that's where the quoting exercising comes in, and then just being able to watch a couple. When we talk about a big order in the book, first of all, it's what's offered above the market or what's bid below the market. This big order here at 80 even sticks out. This big 950 lot order sticks out at 83. But right in here is a chart, a 4PNF chart that you're used to looking at in the room of the ES, right? What we said when we closed the room today, and this was huge because it got people long from a couple messages I got, and if it didn't get you long, hopefully it kept you short. You don't know this until this bar jumps through the VWAP, and it starts to get above 76, 77, and you're like, you know what? I know this. I've seen this movie. I've seen how they had a hell of a time getting through it in these tops, regular trading session highs. George and I talked about in the room real time how it was having a hell of a time jumping into the previous day range. And they had to do this, it seemed like, before they did this. Now, you know that around 10:30 Central, when they started jumping and just sliced through the VWAP like nobody's business. It was like, and we said it, in our opinion, because I don't like to give guys just straight trades and give you someone to blame. But in my opinion, it was the long side was the right side. Find a place to get long. We're going to jump into yesterday's range. And they did it pretty effortlessly on this bar. They just shot through these swing highs, okay? Where did they come back and rotate down? To those old swing highs around 78, 78 quarter. And then it was up, and away eventually to the ultimate target for bulls, at least the first ultimate target for bulls, which was yesterday's close, around 84 even. That's why we topped off around there. But the story started to get told in this bar. when like nobody's business ran up. There was no, hey, we're going back down and all this other stuff. It was upsides, right side. Let me find a damn place to get in. Now, it takes me back to the dome because you got to execute somehow. I said something in the room today that I wanted to repeat because it resonated with me, and that is you got to get dirty. This is a contact sport. So every time someone were to say to me, and I get people saying it less to me now, but they do say it, well, I don't want to be a scalper or short term. I want to trade for many points, many hours, many days. Great. You got to get dirty, though, and learn what short term guys are doing to qualify good longer term locations. And then you trade the price, but then rely on the area to say where you're wrong so you're not so damn tick sensitive. You could be tick sensitive to get in and then get out. You don't have to be worried. Like here, this is in sim. I'm long 3 from the offer. If I'm tick sensitive, I'm pissed. If I'm tick sensitive, I'm happy because it just went offer to bid, right? I could scratch it immediately. Now I can't. Now I did, right? So it's like if I'm tick sensitive, I don't want to be long an offer, okay? I don't want to be short a bid if you're tick sensitive. But if you're area sensitive, you take what your area is, okay, and that's subjective, and say, I'm not wrong until that area gets violated. Now you know where you're going to get out before you get in, and you're not so damn tick sensitive to price. Like right now, it's midday, and this isn't the greatest time to do this exercise, but it is to kind of teach it. And that is, if we had an ancillary that was next to our dome, and let's just use crude oil, we could always change it, and you could always change it. Find one that works for you and play off of it. So here's the point. If I wanted to buy this thing, I don't want to buy it as much as I did in here, all right? But if I wanted to buy it because someone had a gun to my head and said, show me how to buy it, I'd open up the footprint like this and I'd say, well, here's some green that if it gets below these greens in here, I got to be wrong, below 81. So where's my risk? It's going to be about 6 ticks if I were to enter right in here. And he's got a gun to my head, so I have to buy it. So what I want to do is say, I'm going to risk 6 ticks. I think there's potentially buy stops above 83, but not yet. I like to see it rotate up, come back down, and then re-rotate up before I buy it. And he says, okay, but if you miss it, I'm going to shoot you. So in that case, then I just say, okay, I'll buy it. But well, all things remaining equal, right now this market's going back and forth, 82 quarter bid for 60 or 100, 300 offered at 82. If I wanted to buy 82 halves, I would say, let me try to buy 82 quarters. They're trading. Good, I got filled. You see that? Why buy 82 halves and reach when there's 400 offered there and 82 quarters were trading? That's when I could bid with the bidders and probably get it. And then there's an 1100 lot, so I bet you that it's going to probably go through that guy and play as a magnet. And I could take my +2 if I want in there on a third and then play the balance through 83 even. If I wanted to scratch one, I just hit the bid like I did and I scratched it. Then I could pull this guy. Now, here's the thing. There's 150 bid. Now there's 200 offered there. I probably, if I want to get out, got to watch these bids and offers to say I probably should hit the bid because there's almost 400 on the offer if I want to get out of another one of these or whatever. Now that the bid and offer is building, I probably have a chance to offer at a +1 and maybe get it. But if this shrinks, I got to hit it. I'm telling you guys this on a very short-term scalper mentality to help you with any pull the trigger moment. See how I got it? Because the bid offer kind of leveled it off. Now they're bidding it with 300. So my idea is they should take out this 83 even. They know that the big order is there. They're not afraid of it. There are probably some buy stops above there. When they bid this 82 halves, they did it with okay size. They came after these 82 3/4 and did it with okay size, but then came back offered. They're close to digging through 83 even, but not quite there yet. So you continue to work this. Remember, I had to buy it. I wasn't bullish, but I had to buy it. And I covered most of them for a 1-tick winner and a scratch, however it worked out, just based on bid offer. If I had to scratch this last one, I'm probably better off offering with the offer until this shrinks. And see how I got it? I offered with the offer instead of hitting the bid, and I got filled. Now I'm out, technically. So we pull these orders on the upside. However, I still think that 83 even gets touched and gets taken out. And I still have to be long for it or I'm going to get shot. I look at my chart and I see this accumulation. I like that there's one top in here. There's another top in here. And the next time up, they probably have some short-term shorts going to say uncle above 83 even, which is coincidentally where that big offer is, right? You look back on the filter. You got the latest sellers are having trouble having it go down, but the buyers are having trouble having it go up. And it's just really a fight that's getting boring. Both sides are tired and lazy, and it's a hand off the mouse moment. If your goal and story, though, is for 83 even to be taken out, let's just look at something. You have no other tool in the world. You don't have an ancillary market. You don't have a chart. You just have the dome. You have to buy it. So you're watching the bid and the offer. Here's the bid. Here's the offer. It's 200 up. Now they're hitting the bid. Every time you see this shade change, that's the last price traded. So they're lifting the offer, but there's still 290 there. They're hitting the bid. There's only 20 there. Probably if I bid it here, I'd get filled. And this is I just pulled them. Now I probably won't because it just leveled off and 81 3/4 went bid. So if I had to buy it, I'd have some thinking to do. I'd have to think, well, how bad do I want them? Right? And I'm just buying it based on, I think 83 evens will get taken out, and I got a gun to my head and I have to buy it. I flipped a coin and I was bullish. Keep it simple. So it comes back down into here. There's probably sell stops below these three consolidations. So I want to be careful getting long. I don't want to have my heels on a cliff. I'd rather buy it higher than buy it lower. And most people don't get that, right? Everybody thinks the lower the price, the better. Well, if you're buying a car, maybe in the real world, but in trading, not necessarily, because the definition of a good trade location is what? Having it go your way ASAP. So if it goes my way right away and I buy 82.75s, great. If I buy 81.75s and it goes 6 ticks against me, and for 30 minutes I got to play around my entry, not so great, even though technically it was a lower price. Make sense? So it's like lower price buying a car isn't good if it's a lemon. That's the analogy and metaphor I could draw for a consumer technique. Going back to this, what you're used to in conventional wisdom is generally discounted when it comes to trading. You guys understand that more than anyone. Oil has since slipped since we came off 83. They went there, they touched it, sort of a rejection. I scratched it, and oil started to come off, making it hard for the ES to rally. Plus, it's coming into the bottom of this consolidation, and it slipped lower. So again, you want to look for, you have to buy it, but you're trying to time it out. See this consolidation right in here? It's like someone's teeth. Right in the middle will probably be support around 79 3/4. I also have other things that I look at, as you guys know or should know, and that is alert levels. One of them, Tom, tell me where one of them is. It looks like 80 even. 80 even is a good area of support. If I laid a bid down in here, and there is a big bid, I'm not going to lay a bid, but if I laid a bid down here and it sliced through 80 even, I'm not that worried. I think that some longs are being shook out. This area is being violated. So if you got long up at 83 even, 82 half, you got to cover them because your area is starting to be violated. But your next entry would be where this consolidation took place, right in here. Watch my cursor as it runs through there. Right around there should be support. Now, when I say should be support, it's not an alert level. There's another reason why I think that there's support there. Dave also's got 80, 81. So if you're telling the story that 83 evens are going to get taken out, you want to bid these things and watch what the hell happens when it gets down here. Let's have it try to get down in here. There's 1,000 lot on the bid. I don't want longs to lean on that guy and puke through him, though. Got to be cognizant of that. Let me take this. Hey, a big seller just came in at 81.5. Wait, that's not good. Big buyer just came in here at 80.75 and trying to get it to go bid. We've got 81.70, 80 even a big bid, 81 even. Nothing really that I see that is happening to get me long yet. I know there's probably some stuck longs if it goes 80.75, 80 half offer. And you can just sit and be patient. If this oil were to jump 10 cents, I just buy the offer like this. Now, it didn't just jump, just showing you. Now, let's say I got to scratch it. Or let's say I got to get out. Forget about got to scratch it. There's 200 upright in here. I could try to offer 81 quarters, but there's 100 and only 50 on the bid. I'm not as confident I'm going to get them. Now I got to say, probably just puke them and take the -1 because 81's just traded out. They're going back and forth. Just keep it simple. If there's more on the offer than on the bid, you probably don't have as good a chance to sell them on the offer. Just keep it simple. Buy the turn, cover it. An exercise I go over and over with people, and I don't think people do it, but if you do it, you'd understand the value of it. Right now, if I had to buy it, I would wait and say, I could probably buy these and scratch these, and I just did. Did you see that? Because it shrunk down, it was trading, I bought it, offered it, scratched it. An exercise that I would, want people to do over and over again. And if I funded a trader, he'd be good at doing that. Right now, 80.75s are going to trade. I could sell them and probably scratch them. I sold them, trying to scratch them. Couldn't. Now I'm in trouble. Now I try to buy 81s. Can't get those. Got them. Pull these. This bid built up after I sold them. That's the exercise. Remember, in sim trading, you're not trying to make money. You're trying to lose money. Nothing's really happened. It's midday. It's drifty. It's Thanksgiving week. Keep that in mind. 83 evens will probably get taken out. Let me take this back over here. This is more of a confident long in here. Like, you see when we knew that 78s were going to get taken out, what happens when they get took out right here? It formed a thin spot. It had buyer come in. Then the market rotated. If you bid above that thin spot, you got filled and bought the low print in a continuation of another 6 points. That's not, that sounds too easy. It's basic storytelling. They were going to take 78s out. You missed it. Try to get it back to where you missed it if you think there's more upside. Well, of course there's probably more upside. They weren't going to take out 78 evens by a couple points and then go all the way back to 65. That was just low probability. They were going to find what was up around 80s. And you come back to where most people missed it. Then you don't even have to worry about the dome as much in that scenario. You just bid it a few ticks above where the thin spot is. And then you trade the area. Now, this market has probably got longs PO'd because it isn't going up. It's got a lot to do with the time of day, though, remember. So we don't want to overanalyze it. Let's go to this. Let's do this a second. Euro stocks. Euro stocks, as you guys know, is a liquid European stock index that's similar, a little thicker, but similar in size to the ES. It's $10 a tick. It's the dome on the right. It's going to follow the ES. Now, is it going to follow the ES tick for tick and allow to follow the leader? Sometimes, but not always. It looks like we need a drive through 80 before we were going to rally. Right now, the real market's 80 even and 83, and this is all BS in between it. Right now, if I was long, I'd be a little PO'd. We can't bounce. We're gonna have to take out 81, and you could probably buy him down there to cover through 80. Now you could probably sell these 80 halves. Let's just look at selling and scratching if I wanted. See how there's 480, 75, and there's only $1.50. I could have just scratched them and they just traded out. I'm not going to play it that way. If they take 80 halves offer, they should chisel through 80. The guy with the gun is going to shoot me because he wanted me to get long, and he'd have been wrong. I don't like how the bid builds back up. You see that? It's 200 up. Also remember, I'm taking a momentum idea into a non-momentum period of the day. I could cover these if I didn't like them because they're trading out. There, I covered 2/3 of them as they're trading out. There's only 50. You see how there's only 100 when it goes offer? Well, for a momentum trade, you want to see them offer it if you're short and just step on it with 500 behind and have it stick and chisel into 80 quarters right away. Give me 1 second, guys. Let's watch how this. All right. So now this market, what does it do? It runs away. I had a phone call I had to pick up. When you're not getting this market to run lower, let's just get out of that. When you're not getting this market to hit the bid and offer it, and you're trading momentum to take out a level, you can't sit with it. That's why momentum trades are so advanced, because people, they always want to get paid right away, and that's great. And in a momentum trade, you should, but if you don't, you got to get the hell out. So that's kind of the rejection you want for this market to, okay, can't go through 83, can't go through 80. Now what? Do you buy it here? Hell no. I don't want to buy it here because it probably is going to rotate back down against these greens. If you're going to buy it, you want to buy it closer to 81 and sit with it, kind of be bored with what the heck's going on. Going to the Euro stocks, this is what I was afraid of doing a lot of these drills intraday because there's nothing going on. But it does show you just when I say a market goes bid, 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 it's kind of what it just did. You see how it went fast up on the dome from like 80.75 to 81.75? And then you further see how it's green here on the footprint or the imbalance here. So the speed that you see on the dome is kept track of on the footprint. And the guy that was short down in here, just like I was with that one lot, and didn't cover all of them, covered some of them, sat with it, got distracted, have it run up. Those guys are chasing it up. The guys who didn't buy it are trying to probably buy it back down in here. So that should be near-term support. If it is, it's probability. If it's not, then there weren't as many longs or shorts rather that were stuck here. That's fine. It's not you against the market. It's not about you being wrong. The dynamic that was supposed to be in place just wasn't. I wanted to keep this short and give people a sense, again, how the hell to scratch something. Obama's talking about the Turkey-Russian situation now. Keep that in the back of your head. Those watching it on recording, obviously the story won't matter, but those watching it live today, this could create more movement one way or the other. Don't be surprised. So here's what happened. We come down. Look at the footprint here on the left. We come back up. We got this green that should hold as near-term support. If it doesn't, then we're bearish. We're going to go through 80. How would you buy this? This is a question. Well, buying a pullback is never easy, but you got to trade the area. So are you better off buying 81 quarters or 81 halves? Right now, it's a toss-up. They're about 200 up. When 81 quarters are trading, you bid those. All right? If you feel like you got to reach and go up, then you do it. You should get 81 quarters. When I say should, because there was only $1.50 there. You haven't gotten them. You haven't gotten them. You haven't gotten them. There's 200 up. It could go bid. It could go offer, and it's a 50-50 shot of what it could do. Back and forth it goes, probably close to bidding the bid. In that case, I'd pull it. You see him kind of flipping around. I don't have a lot of time to go through being long in here. Almost trying to show you guys on how to scratch and push a market one way but get the hell out. Kept me from buying it down in here. But 80s was support, but it was that moment where you were going to get the bounce, but it was a sticky buy because there were longs that are puking at and below 80. Trust me when I tell you, that's a line in the sand. This is how people should practice on demo. Lose a tick. Buy one on the offer, sell one on the bid, like I just did. Buy two on the offer, sell one on the bid. You got how many? You got to get out of one, right? So you got to look for buyers. If you're long, you got to look for buyers to get out. Know that cadence. Offer it with the offerers to try to scratch it. But if you can't, oh, good. So you scratched it. Do all that. You see how it went from 600 to 300? Right in here, there's 600 offered. Georgia going through this 83 at some point. Right now, there's 300 on the offer, and there's about 300 on the bid, right? Bid offer, bid offer. So what would you want to do? Practice losing money. Sell it on the bid 2 times, buy it one on the offer to get out of one, try to scratch one on the bid. Keep doing that over and over again and reverse the whole notion that people make money on sim and they lose money in real. Flip that around. Lose money on sim and make money by just practicing this raw skill. The other thing is, and then I'm going to run, try to take the skill to a level of when this goes up, buy this if the offer is small and try to scratch it. It's not. See how the 15 right here in the Euro stocks is only bid for 300 and there's 700 offered at 16? I don't want to buy the 16s. Unless this really takes off, then I'll buy the 16s. The hell with that. I'll try to bid the 15s. That's if I want to buy it. But if I don't want to buy it, I'm not going to buy into this 700 lot. Even if I'm a long-term trader. No reason to do it. If this takes off and I have to, great. That's liquidity that allow me to get in by lifting an offer. If this gets down to under 300 or 400 and you still want to get long and this S&P has rallied or continued to stay bid, now you could play how markets relate and react off each other. You're not doing this in sim. You're not going to get it. It's going to be a useless session for you. These things are going through 83. We should have bought them as they went through 80.5, and you've seen the kind of rejection down there, reach. We had 80 evens as support. The rejection, look at the footprint now. Runs up, comes down into these greens where all the guys who were stuck short down here were trying to bid it, and now it's rotating up. Now you got to look for a place. You pop the champagne through 83 even. Hope this session helped. I wanted to keep it short, but if people are practicing the let me buy it on the offer, right? Try to scratch it. If I can't, try to take a one-tick loser and purposely try to lose money. You're not going to get good at reading the dome and seeing where it helps you. You're not supposed to trade this fast. That's not the point. The point is just recognition of what big orders are showing you, where the balance and imbalances take place, how down at 80-50, how you can get short and cover the damn things because it isn't going, and see it walk up in here, and how when you see it go fast in here, you've seen how this green showed you that and rotated it back down to show you some near-term support. There's 100 there. I'm offering it to try to scratch this. I got filled on one of them. I probably would have got all three of them. Again, this is just demo and practicing. If I offer two more, I see 200 there. I see 300 on the bid. My chances are getting filled are still okay. Now they're not okay because it's only 200 up. So I'm watching, looking at other ancillaries. Should I get filled? Should I get filled? When are you going to take the -1 if you're long two from 82.25? Probably right there because you've seen it shrink to nothing. So now you get out 82 evens traded. They might go 82 even offer. Even if they don't, whatever. You're practicing. You want to lose money. If you practice to make money, you won't. See these 16s go bid? And these 82 quarters and 82 halves go bid? That wasn't. You rewind this after I upload. It's going to be a few hours before I upload this. But at this particular moment, you've seen 816s go bid. Now they're offered right in here. This is what's important for these to go through 83. If you're long, you want these SOBs to go 16 bid and dig into the 17 and 18s. Look at all the size at 16, 17, 18, really 17, 18, 19 here in the Euro stocks. This other dimension of looking at ancillary markets and what's in their book is the edge over other guys. This goes 16 off, or this goes 82 half off, or 82 quarter off, or 82 even trade. Rhyme and reason. I wanted to keep the stretch of doing these Tuesday sessions alive. I'm on location, as you guys, as I told you. I don't know if I recorded that portion of it, but exercise. And if you're not, these drills are huge only because they're opposite of conventional wisdom. We'll probably look to do a session like this early so we can get some better price action than what we have. But we had decent price action in here when this market went bid in here where my cursor is, and it ran up. And you just that's what it looks like. If there was noise attached to it, the sounds when we went up are the shorts saying, holy SHIT, and all their swear words. So that's why when it rotated back down where the swearing started is where there's going to be near-term support. Now, if you're long or you're bullish, you want this thing to go bid, even though it's after hours in Europe. Guys, have a safe rest of the day. I'm going to stop the recording now. Again, the exercise is to buy the offer, sell the bid. Buy the offer, try to offer with the offer, and scratch it, just like that happened. Buy the offer when it gets small, try to sell the offer. If you can't, when are you going to hit the bid? That's your exercise. It isn't to get winners. It's to get the hell in and the hell out. I'm just going to hit the bid. Everybody makes money in sim and loses money in real time. Lose money in sim. Flip things around.